Hey everyone, and welcome to the deep dive. Today we're diving into Ocean Biomedical,
OCEA.
OCEA. That's right. They're in the biopharmaceutical space
Yeah.
working on some really interesting treatments.
Yeah, really cutting edge stuff.
Definitely cutting edge. We're talking cancer treatments, fibrosis, even infectious diseases,
Big challenges.
huge challenges. And we've got a ton of sources to dig into. Financial reports, company profiles, analyst ratings, news articles.
You name it, we got it.
Exactly. We really want to give you that 360-degree view of OCEA.
Absolutely.
By the end of this deep dive, you'll be able to decide for yourself. Is this company like a hidden gem just waiting to be discovered?
Or is it a risky bet, especially with those NASDAQ delisting notices?
Oof. Yeah, those notices are definitely something to keep in mind. We'll get to those later.
We will, but first, let's start by understanding their business model. What are they all about? What makes them unique?
Well, they're not your typical big pharma company, like the ones with those massive research labs and armies of scientists. OCEA partners with research universities. They license promising discoveries instead of doing all the research themselves in-house.
Very clever model.
Yeah, I really see the appeal. It's like they're tapping into this constant flow of new ideas and discoveries.
Exactly. It gives them access to this cutting edge research that they might not have the resources to develop on their own.
Right. And that can potentially speed up the whole drug development process.
Saves a lot of time and money.
Absolutely. And those are two pretty important things in the world of pharmaceuticals. But I'm guessing there are some trade-offs to this approach, right?
You are absolutely right. No business model is perfect.
Right.
There are definitely risks involved. OCEA relies heavily on external funding, grants and partnerships.
Okay, so that can be a little bit unreliable.
It can be, yeah. It makes their revenue stream a bit unpredictable. Plus, a lot of the discoveries they're licensing are still in the early stages of development.
So there's no guarantee they'll actually turn into marketable drugs.
It's a gamble. There's a lot of uncertainty there.
So it's kind of like investing in a startup.
Exactly. High potential rewards, but also high risk. You got to have the stomach for that.
Okay, makes sense.
Ugh.
So we've got this company with this really interesting business model, but obviously some inherent risks. And that makes me think about the management team. Are they the right people to navigate these challenges?
Great question. Always good to evaluate the leadership.
For sure. What are we seeing in terms of their experience, track record, anything that stands out?
Well, I can tell you they definitely have strong scientific credentials. Take the CEO, for example. PhD in molecular biology and immunology.
Wow, impressive.
Right? And they founded other biotech companies, too.
So they've been around the block a few times.
They know the science. No question about that.
That's good, especially with such a science-driven company, right?
Absolutely. But, scientific expertise is only part of the equation.
Right. What about their business skills? Can they actually turn these scientific breakthroughs into, actual products that make money?
That's the million-dollar question, isn't it? They haven't been around for very long. Their track record in terms of commercializing drugs is limited. That's something to keep in mind.
Okay, a potential question mark there. So we've got this unique approach, a solid scientific foundation, but maybe some questions about their ability to execute on the business side.
Exactly.
All right, so let's talk about the elephant in the room, financials. How's OCEA's financial health looking? Are they flush with cash, or are they struggling to keep the lights on?
So they're not exactly turning a profit yet. In fact, they've reported some pretty significant net losses in recent years.
Oh, okay. Not great.
Not ideal, no. They're relying heavily on grants and those funding rounds we talked about.
So they're kind of burning through cash to keep things going.
That's one way to put it.
Okay, what about some of the key financial ratios? Things like debt-to-equity ratio.
Yeah, good point. Their debt-to-equity ratio is pretty high.
Okay, so for those of us who aren't financial wizards, what does that actually mean?
Basically, it means they're using a lot of borrowed money to finance their operations.
And a high ratio like that, is that a good thing?
Not necessarily. It suggests there's a higher financial risk involved. If things don't go as planned, they might struggle to repay those debts.
So it's really riding on their research actually panning out.
It really is. Investing in OCEA is not for the risk-averse.
It sounds like a bit of a gamble, to be honest.
That's a fair assessment. High risk, but also potentially high reward if they can pull it off.
Okay, so we've got a company with a really unique approach. Strong science, but definitely a shaky financial picture. What does the market think about all this?
That's a great question. Let's find out after the break.
Stay tuned. We'll be right back with more on OCEA. Welcome back to the deep dive. Before the break, we were talking about OCEA's financial situation and how, well, they haven't exactly been profitable.
Right, and that always makes investors a little nervous. So let's see how the market is actually reacting to all of this.
Good point. Because at the end of the day, the market's opinion matters, right?
Big time. What's the sentiment around OCEA? What are people saying? Well, their stock price has been, well, pretty volatile.
Oh.
Yeah, it's been on a roller coaster ride. Some big jumps when there's good news about their research, but then those gains, they don't always last.
Volatility can be exciting, but it can also be a little scary.
For sure.
What's driving those big price swings,
Well, a few things, I think. OCEA is still a pretty small company.
right?
They're early stage, so their future, it's still a big question mark.
Makes sense. So they're kind of at the mercy of, like, news and rumors.
Exactly. They're more sensitive to those things than a larger, more established company.
Gotcha. Anything else?
Well, remember those NASDAQ delisting notices we talked about earlier?
Oh, yeah. Those,
Yeah.
we can't just ignore those. What's the story there? Are they in serious trouble?
It's a bit of a red flag for sure. Basically, they're not meeting some of NASDAQ's listing requirements, things like maintaining a minimum price for their stock.
So not good.
Yeah.
But does it mean they're definitely going to get delisted?
Not necessarily, but it is something they need to take care of.
Okay, so it's definitely something investors are watching.
It is.
What happens if they actually get delisted, though?
Well, raising capital becomes a lot harder. Institutional investors, like the big investment firms, they tend to shy away from companies that aren't listed on a major exchange.
So it could really stunt their growth.
Potentially, yeah.
Okay, so the market's a bit torn. Excited about the science, but worried about the financials. And obviously those delisting notices aren't helping.
That's a good summary.
Let's talk about the team behind OCEA. Who are the major players? What's the ownership structure like?
All right. Well, one thing that jumps out is the high percentage of insider ownership. A big chunk of the shares are held by the founders, the management team, employees.
So the people running the show have a lot invested.
They do.
That's usually a good sign, right? Shows they're committed.
Yeah, it can be. Aligns their interests with those of the other shareholders, but like with anything, it's not all sunshine and roses.
Okay, I'm sensing a but coming.
There are potential downsides.
Like what?
Well, when you have such a concentrated ownership structure, it can raise concerns about transparency and accountability.
Yeah, I see what you mean.
You know, are decisions being made to benefit everyone or just the insiders? It's something to consider.
Right. Potential conflict of interest there.
Exactly.
Anything else we should be aware of regarding ownership?
Well, on the flip side of that high insider ownership, you have relatively low institutional ownership. The big investment firms, they haven't exactly jumped on the OCEA bandwagon.
Interesting. Why is that?
Could be a number of things. They might be waiting to see more progress, especially with their financials.
Right. Got to see those numbers improve.
Exactly. Or they might just be hesitant because, OCEA is a small early stage company, and that means higher risk.
Makes sense. All right, so to kind of wrap things up, let's do classic SWOT analysis. Strengths, weaknesses, opportunities, and threats. What are we looking at for OCEA?
Yeah, good idea. SWOT analysis is always helpful. Starting with strengths, their